Hello everyone, welcome to my YouTube channel where I discuss a lot about financial markets, trading, my learning and my insights and my future outlook going forward. So without further ado, let's jump into the analysis. So the theme of the day today was, are we still in the Christmas rally? Is this rally still intact? So we will discover all these things and we will delve in deep into, is this actually the end of the bull run or is it just the start? What is going on? So we'll discover all these questions in this video. So for the people viewing for the first time, let me discuss the format of this video. I normally discuss the different time frames starting from weekly, daily and intraday, and then I discuss the related assets like QQQ, VXN, etc. And then finally, I discuss about the macroeconomic situation which can impact the markets, and then I discuss the summary of today. So this is the format of the video, and let us jump into the analysis of weekly time frame, and let me share what I can learn and what are my insights. So let's discuss about the weekly time frame. In the weekly time frame, I just had two important points, and let me show you both of those points in the chart. So this is the weekly time frame chart, and as you can see from the previous videos as well, that I have drawn this zone which corresponds to the Fibonacci levels. So the high of the Fibonacci level that I took was this one and the lows was this one. So this is the 1.4 and 1.6 ratio, and this zone corresponds to that golden pocket. Now, the reason why I'm sharing this is because on the weekly time frame, we are facing a resistance in this zone. So there are very high chances that we will consolidate for a few weeks over here, and then we may decide the next leg of the market. But as of now, as of immediate basis, we are, very much highly, poised to actually consolidate in this zone. And the way I draw this for all you guys who are new, it's like this. So if I select the Fibonacci high point and low point since the recent months, then this is what you get, and this is 1.414 and this is 1.618. so this is the golden pocket that I was talking about. Now moving on, the support and resistance levels for the weekly time frame is this. So this is the resistance level that I'm talking about, and still my initial support is still sitting at 5-day EMA, that is this blue line that you see on the chart. So this is all regarding the weekly time frame. And as you know that tomorrow is the closing week, tomorrow is the last day of the week, and we will get the closing candle as well. So tomorrow's closing will be very, very essential and important for the markets. As you can see over here on the weekly basis, we are constantly making green candles, and that too with the 8th consecutive week. So a normal digestion or a normal pullback or a normal consolidation is very, very expected, and it shouldn't surprise you. So more on that on the daily time frame section, but this is my take on the weekly time frame. So let's talk about the daily time frame. And in the daily time frame, I wanted to discuss very important thing, and starting from the first point, that is we had an inside day today. So let me show you in the charts what I mean over here. So this is the daily time frame chart, and as you can see, yesterday we had a very nice fall of 1.5%, but again today we had a upwards day of 1.13%. Now when I say we had an inside day, what do I mean over here? What I mean over here is we did not take out the previous day's high, that is this one, neither did we take out the previous day's low, that is this one. So whenever a day like this happens where we are not able to take out the previous day's high, neither do we able to take out the previous day's low, this day is called as an inside day. So normally inside days happen because market wants to digest what has happened aggressively. So yesterday market sold off aggressively, and that selling or that aggression was digested today. And the most important part for the bulls is bears did not get the follow through. So what do I mean by follow through? Now when you see this type of candle, normally in Japanese candlesticks, this type of candle is called as Marabozu candle. Now when a candle doesn't have a very big wick, and when a candle has a position of opening and closing just near to the wick, at the body of the candle closes just near the closing, then that is called as Marabozu candle, and that signifies the strong aggression depending on the color of the candle. So over here this candle signifies strong aggression of sellers. But the most important part that happened today was the bears did not get a follow through. It did not get a continuation candle. So the confirmation, if the bears were really strong, then they should have defended the bottom of this range, and they should have closed the day below this range. So this is basically coming out of a pure candlesticks observation. So the bulls still have the gas out intact. Why? Because it defended the 5-day moving average. So now the things are very, very clear. What is my strategy moving forward? It is, if we close below this range, that is the bottom of the range, only then there is a chance of testing the immediate support, that is 16,660. Now, if we don't close below this, then it is very hard for me to be bullish. So normally what happens is, the stocks or any financial instruments, when it wants to go up, it takes the stairs. It goes organically. It takes a lot of time. But when it comes down, it takes the elevator. So that's the saying in the financial markets. So if the market is really, really panicked, and if the market is, going down, or people are selling, then why are we not seeing that strong aggression over here today? So apparently the bulls are able to reclaim and defend the levels of 5-day EMA, that is the shortest term sentiment. And now moving forward, the concept or the strategy is, if we close below this range, then we should be bearish, and the imminent touch of the immediate support should be our goal. But let's say if we don't close below this range, and let's say if we close above this range, or even if we are in this range, then it's on the no man's land territory. So until and unless, so markets move in contraction and expansion phases. So let me show you what I mean over here. So market has went in the contraction over here, in the range bound, in the very narrow channels, and then it expanded. Same thing happened over here. It contracted again, and then it expanded. So there are phases in the markets where markets consolidate, and then it reveals its next leg after the contraction. So if the markets are digesting these gains, as you can see, it wiped out 3 days worth of bull run in a single day. So bears market always, or when the market goes down, it always takes out a lot of worth of gains in a very single day. So we are still very, very cautious and very, very optimistic, and the only reason is because we are still above the 5-day. Until and unless we don't close below the 5-day, or we don't test the 13-day moving average that is sitting over here, that is the immediate support. So on the daily time frame, since we are closing this week tomorrow, and in the holiday, we are in the holiday season, so I don't expect a massive sell-off until and unless we have some really negative news. So that's my take on the daily time frame. And I discussed that the immediate support and resistance levels. So my resistance is still sitting at the top of the Bollinger Band, that is this one, that is 17,250, but my immediate support is sitting at 16,660, and my screaming buy in the very, very short term is sitting at 16,400. Now this white line that you see over here is the anchored VWAP, and the green line over here that you see is the 13-day moving average. So that's my take on the daily time frame. So now let us talk about the intraday time frame, which is my favorite. So for all the day traders out there, normally what I do in my personal life is I design a strategy and I do my homework every day before the market opens. So my strategy going into today was, if we had a sell-off on the prior day, so if we don't get a follow through, then we should closely look at the previous day's low. And let me show you what do I mean over here. So this is the 5-minute time frame chart. So let me show you by maximizing it. So this is the 6:30 grand opening, opening of the session. So my strategy going into today was, if you look at the daily chart, I was looking to see what is happening with the price when it approaches the day's low, because the general rule in the for technical analysis is, a security, if it wants to go lower, then it has to take out the previous day's high, previous day's low. And if it wants to go higher, then the first thing it needs to do is to take out the previous day's high. So that is what I was looking for. And one other thing that I was specially looking for is, we were very, very near to the 5-day EMA. So I was very, very curious to know, okay, what will happen at the 5-day EMA. So these two levels I was very, very aware of. Now what happened is we got a gap up. So we gapped up in the regular market session. So as you can see over here, the start of the session happened at 16,922, and that was almost around over here. So we gapped up massively. So I was of the opinion that once we had a massive sell-off yesterday, then again if we get the gap up, then definitely the bulls are going to get trapped and they are going to get squeezed. So that's exactly what happened. So I was looking for the opportunities to actually see and what happens at 5-day and what happens at the day's lows. So today we unfortunately did not get the day's low, but what we did is we defended very nicely the 5-day EMA. So that level was around 16,820. So look at what happened at that level. So we started over here, and as you guys know, I don't trade on the first 30 to 45 minutes. I let the market news get over, and then I look out for an opportunity. So what happened today is, you can see over here, just right after the regular market session open, we tried to sell off and we sold off heavily as well. So if you look over here, 7 o'clock or after 7 o'clock, there was a minor news over here that was CB leading index month over month. So after that news, we got a massive red candle over here, right? So I was of the opinion, okay, we destroyed the P0 level. Now I was waiting for the test of the 5-day. So when the price started to move up again, I was very skeptical that, okay, we rejected the top of the range, so this is definitely going to get rejected. So what I did was I waited for the crossover to happen, but the crossover never got completed. We never got the confirmation. As you can see over here, just after, when we were trying to get a crossover of 5 and 26-day EMA, we got a huge red candle. So I got the confirmation that, okay, the theme of the day is bearish. So I waited again, and once the price approached the 5-day EMA, that is around the 830 levels, I went into a long position. But look at how much time did it took to consolidate and then go higher. So it almost did nothing for almost an hour. But my evidence and my conviction was coming from a fact that the cumulative delta, which is the measure of the aggressive buying, that was giving me a buy signal. So normally in my videos I have shown that indicator only once, but let me show you, because this is the day where you can see in real time action like why I was convinced to take a long positions over here. So let me show you what I mean over here. So this is basically my NinjaTrader trading platform, and they give a lot of proprietary data and indicators as well. So in the top portion, the top panel that you see is the normal price action 5-minute candle. But in the bottom portion, the candles that you see is basically cumulative delta. Now, cumulative delta is basically the change or the difference in the prices which hit the bid and which hit the ask. So why is this significant? It is significant because market is moved by the aggressive actions, by aggressive buyers and sellers. And when you are aggressive buyer, you will take out all the offers on the price ladder to move the price higher. So over here, you can see the price action started at 630. It went down, the delta went down, but it went up, the delta went up over here. Then it went down, little bit down, it consolidated, and then look at the divergence, look at the change. The delta went up and made a new high, but the price didn't make a new high. So what can we infer from this is the buyers were really aggressive, but the passive sellers were keeping on selling, and that is why the price is not able to break that high. So I was very confident that if the buyers are present and if the buying pressure is present, then there is a very high chance that the support of 5-day EMA will hold. So I was waiting for the buyers to give up and take the sellers the charge. But look at what happened. Price kept on making lower highs, and price kept on making lower lows over here as well. But at the same time, what was Delta doing? Delta was making higher lows. That means Delta was strong. That means buyers were strong. So if buyers are constantly strong, if you see over here, higher low, higher low, over here higher low, and look at the price is making lower low, again lower low, again lower low. So this is the classic case of divergence, and this, because of this indicator's confirmation, I was very confident that if I can grab, or if I can catch the price at the 5-day EMA, that is 16,820, then that would be a really good long opportunity. And look at what happened afterwards as well. The delta kept on charging higher. So what does that mean? That means the buyer interest was continuously going on. So as you can see over here, it was gradually going up. So delta was telling me that buyers were aggressive and buyers were active, and that is why I went on a long position today. So this indicator that I'm showing you is a paid indicator, and it is the order flow plus from NinjaTrader brokerage. So TradingView doesn't have this cumulative delta indicator. The problem with TradingView is when you type cumulative delta in the search of indicators, it gives you a custom script which any other people have written. It is not by default or not offered by TradingView itself. So be aware of all these settings, and don't worry, I am going to make a detailed video on my chart and its configurations and the formulas that I have used and everything. So stay tuned for the training and education playlist video as well, because you will see a lot of training content wherein I show you in detail how to set up these charts and how to buy the data, where to buy them, and how the futures market data works. So I will explain you all these things in detail. But in the intraday time format, this is what was making my conviction strong to go long. So as long as your decisions are backed by data and you have proof of conviction, then you can trade responsibly and trade with a reason. So that's why I wanted to show you this. There are also footprint chart and there is also tick chart, but don't worry, I'm going to explain everything in the training and education series. So this is my take on the intraday time frame, because once you grab these right levels which are coinciding with multiple time frames. So as you might have noticed that I take into account the levels from the daily charts, and then I try to draw the conclusions that okay, which level should I emphasize, and how do I select the pivot levels, etc. So all that thought process makes your strategy very intention based and very rule based, and rather than intuition based. So with experience you will get all of that, but I would suggest that being data driven, being reason driven helps a lot. So that's the reason why I went long today on the intraday basis. Today we did not have a pivot level rejection or a any other sorts of technical things, but what we did have in the later part of the session is the EMA crossover over here. So as you can see over here, we had a 5-day EMA crossing the 26-day EMA after 10:45, that is near the closing session. So that was a bullish sign, and then we never looked back. So this is my take on the intraday time frame. Coming on to the QQQs, the QQQs were pretty much in sync with the Nasdaq Futures price action pretty much the entire day. So there is nothing new thing on the QQQ. If you come at the VIX, that is the volatility index for Nasdaq, on the daily time frame, it looks like it is going to have a crossover, but we will see unless it closes and it gives us 1-day confirmation. We can't be sure. So apparently it is taking the support at this level, that is the light green line that you see over here on the daily basis. And on the intraday basis, if I change my interval to 5 minutes, as you can see over here, it took a rejection between the R1 and R3, and then it kept on going lower. So intraday it was a very well trendy day, and that's pretty much my take on the VIX. So now let us go to the macroeconomic section of the video. So at last, in the macroeconomic section of this video, I would like to discuss 2 important points that can and that will impact the markets. So first thing is, we are in the very strong seasonal period, that is this holiday season. Second thing that I wanted to discuss is there is no major market news, moving news. So like there is only one, geopolitical tension going on in this world right now, which is near the Middle East tensions, wherein the Red Sea or the, Israel conflict, because of that, there may be, some problems or, escalating tension issues. And one of the key, subtle but, key reasons why, I see this geopolitical risk is because, the Houthi, rebels, like the sect of, Iranian, proxies, that may, deal with, capturing of the commercial containers down to the Suez Canal and down to the, global shipping routes. So if that gets disturbed, then the entire supply chain market is going to get disturbed. And once that disruption happens, then, the prices again will shot up. And, if that, sea routes gets, problems, or the security of the big containers becomes a huge issue, then the supply chain is going to get disrupted. So the only, risk for the global economy right now, which I wouldn't worry too much about it, because honestly, it's going to get, dissipated by security forces. So that's the only reason why we are having a little bit, pullback in the markets, because because of two things: the escalating tensions between the Israel and, the Middle East, tensions, and the disruption of the supply chain containers because of the Houthi rebels. So that's on the geopolitical front. Now you might be wondering, why am I discussing the geopolitics in this financial video? The only reason is I tend to discuss anything which can impact markets. So as far as the informed market participant is concerned, you need to be aware of fundamental, technical, and as well as macroeconomic reasons and macroeconomic factors that can affect market in positive and negative ways. So that's my take on the macroeconomic section. So at last, I would like to thank all of you for viewing this video, and I hope that you are getting quality content, and I hope that you are getting so much to learn. So please feel free to like, share, and subscribe, so that YouTube algorithm realizes the value and pops this content more. So please do like, share, and subscribe, and thank you for your time. And please mention in the comments below what videos would you like to see. If you have any doubts regarding these videos, I would love to engage into meaningful discussion. So until next time, see you guys.